Yeah, I know, isn't this great? And he writes, at what price must silver be before I return to being a normal human being and can start to enjoy spending my money again? Can you help me out?
Sure. Well, I think the problem is that we, and not me and you, but we as a society have the sickness, not him, because that's how people used to think. That's how they think in a lot of cultures today. I'll bet in China and India they still think that way. I'm constantly putting references from books I read about how people used to talk only 100 years ago about what net worth really means. But as for what the rate is that will make you feel better, the problem is it's a moving target. I mean, are you going to tell me they'll stop printing money today? Well, then I can. Well, one, are they going to stop printing money today? And two, am I going to be able to calculate how much money is actually out there? You know, you have these $16 trillion secret loans from the Fed and Fed swap things and long-term LTRO, what do you call it, long-term refinancing operations. There's so much money out there we don't even know that it exists, let alone to calculate it. And then, of course, they're going to print more. So the fact is, look, I mean, I did a piece yesterday. I did a piece called Simple Math and $100,000 Gold. And basically it says, look, depending on how much money is out there, here are the estimates of M2 that are published. Here's the M3 estimates that are out there. Here's the amount of gold that's been mined of all time. Here's the amount of gold the U.S. says it has. I mean, if you just do a range of these things, you say, well, gold could be anywhere between 2,000 and 150,000. But we'll never know how much is actually out there. And clearly, the bias is going to be the high side. I mean, 2,000 is an extremely conservative situation, which is unlikely to happen. So my point is, we're so far from that number, it's not even worth calculating. When you can start buying more things with your silver and gold, like a table costs 1 ounce of silver instead of 30, well, maybe your mindset will change.
Yeah, and John Williams, for a long time had noted, this goes back 2-3 years, in an interview that he did, he said that the inflation-adjusted all-time high using the real, I think the M3 numbers, the real inflation-adjusted 1980 all-time high in silver, for a long time he said was $456 an ounce, and now he's saying based on just the money printing over the last few years, that number's $506 an ounce, right in that range. So
yeah. And there's the whole point is there's so many numbers out there. M3 is just one number because the 16 trillion the Fed lent out, that doesn't get included in M3. What this Fed swap facility where all they're borrowing money, that doesn't include. So what is number? I wrote the other day about M4, which is M3, which we don't even know, plus all this other stuff we don't know. So you pick your number. I mean, the fact is there's been a purchasing power over time. For instance, the Dow Gold ratio, okay? Not that 30 stocks should measure what gold is, but the fact is it generally will go down to 1. That's a starting point. When the Dow Gold ratio is 1, I have a feeling you'll see a lot more of the historic purchasing power of gold come into play. But who knows? Maybe you won't. It's really just, I think there's an innate understanding of gold that goes back 5,000 years as to whether it's undervalued or overvalued. And it just in the last 40 years with this worldwide fiat experiment, people have forgotten, and I think they'll remember very quickly once reality starts to set in.
Yeah, well said. Well, this one comes from Nathan, who acknowledges that you don't have a crystal ball, but if you did, when will the CFTC get off their butts, off the couch, and define the word swap so we can start to see the silver-inspired countdown to banksters' implosion worldwide?
Well, the one-word answer is never. The longer answer is the CFTC is the government. The government is who is suppressing gold and silver. So never. There is not a chance in hell that the CFTC will ever impose position limits on silver. And if they do, they will certainly not do it in a manner that will hurt the structure of the market. I mean, look, I just put it in my piece today. I mean, the J.P. Morgan just got a waiver today from the CFTC that they don't have to do any kind of reporting regarding its position limits, its position until at least May of 2012. Right. So that's another 6 months away, and 6 months from now they'll find another reason not to, and et cetera, et cetera. It's never going to happen. It's not going to be the government that destroys itself. It's going to be the market forces that destroy it.
Okay, moving on. I don't know that any of us wanted to hear that, but it's the truth we're looking for, so thanks for that, Andy. This one comes from Sander Boers, and he writes, Well, first of all, I'm going to address this top part of this because I think this is what he's getting at. I think there's two camps, right? There's the Eric Sprott, John Embry, Bob Chapman, Eric King, and others who think that silver mining companies are still fantastic investments and they're undervalued, but it's paper. It's a paper deal. It's a paper product. Now, the other camp is Andy Hoffman, Lindsey Williams, Bix Weir, Chris Duane, Brother John F., Ann Barnhart, and a whole slew of other folks that say paper is tremendously dangerous, mining stocks or not. So here's Sanders' question. Could you ask Andy why he differs with Bob Chapman about holding mining shares and stocks? Bob seems quite vehement that it's okay to hold them and that they're safe.
Okay. Well, there's so many ways to answer this because the main thing to say is that it's up to you. You do whatever you want, right? You decide. I tell anyone who say, what should I do? There's a continuum of things you can do to protect yourself, starting from a zero would be keep all your cash in the bank in Citibank and see what happens, okay? And number 10 would be to move to a desert island with gold and food and bury your gold in the ground, and that's it, right? So there's no wrong or right answer. It's a matter of what you want to do. Now, that being said, I wrote a piece yesterday based on something Bill Holter wrote. Now, Bill Holter of GATA fame, a good friend of mine and one of the smartest guys around, he is very vehement also that as well as bullion, you need to own mining stocks. And he wrote saying that gold is only good for bartering, you must have it, but it's the stocks that are going to, allow you to buy all these great things like houses. So I'm just going to read two paragraphs from this that are right here because David Schechtman of Miles Franklin highlighted them today. This is what I wrote. My primary reason for no longer owning mining stocks, aside from those cited above, and those reasons are all the standard reasons, nationalization risk, operation risk, share dilution, etc., is that stocks are for speculators, not for people attempting to protect themselves. In recent years, speculators have been destroyed by the strengthening clutches of the worst bear market in generations based on the collapse of the largest financial Ponzi scheme of all time, and thus the last thing one should do right now is take unnecessary risks. Bill admits that bullion will help you sleep better, and I sleep better now than at any time in the past 5 years, knowing my physical gold and silver is not going anywhere and must rise in value, likely by higher percentages than 99% of all stocks in the history of financial markets. As for bullion only being used in barter situations, nothing could be further from the truth. Physical gold and silver are money, hands down. The most liquid assets on earth, far more liquid than stocks, dollars, pounds, euros, or yen. Not to mention, given that I do anticipate a global financial collapse, I'm happy to hold my barterable metal, which, trust me, will purchase plenty of cars, houses, and estates if the world is safe enough to ostentatiously spend on such frivolous items. Not that I wouldn't like cars, houses, and estates, but right now I'm more focused on physical safety and financial well-being. That's my answer. And as for Eric Sprott, I'm not sure what he thinks personally, but he also happens to have a brokerage firm which sells and does investment banking for mining stocks. So part of what he's saying is going to be talking his book.
Okay, that's a fantastic answer, maybe the best answer we've heard, and everybody needs to digest that, use their own discernment, and do what they feel is right for them. That's perfect. Okay, there's 3 more questions to go. Let me piggyback on Joe's question before I ask you it, because this question pretty much has to do with the silver to gold ratio. Now, as we look through your crystal ball at the future, I hear this from people all the time. If silver is ever $500 an ounce, who will buy it? There will be no buyers. It's too expensive. And my response to that has always been, look around at the marketplace. There's plenty of buyers willing to buy a share of Apple stock at $350 or an ounce of gold at $1,700. What's your take on all of this, Andy? Who are we going to sell this precious metal to when the time comes?
Well, per what the last person said about thinking of everything in terms of silver as opposed to dollars, what does $500 mean? What is the definition of money? One of the main definitions is that it's calculable and it's scarce and measurable, and you know how much of it is. $500 is just a term. I mean, heck, $500 meant something a lot different 10 years from now, let alone what it's going to mean 10 years in the future. So I don't really think about it in terms of $500. I think about it in terms of how much money is being printed out there, how much, in other words, how much inflation, and what's the historical purchasing power of silver been, and what will it be? So I don't really care if it's $500. I care if we have hyperinflation, $500 will look cheap. It could be $5,000. I mean, I believe we were talking before about what the actual price of gold should be based on how much money's out there. People like Jim Sinclair and Mike Maloney, use $15,000 to $20,000 just based on the money that's out there. And like I said, I have a range that can go much higher than that. Well, if you have $15,000 to $20,000 gold by an extremely rigid statistical measure, and the historical gold-silver ratio is 15 to 1, and now silver is coming out of the ground at only 9 times the rate of gold, plus, unlike all the gold that's still around, all the silver is gone. There's less than 1 billion ounces left. Why would that historical ratio in an unmanipulated market not get back down to at least 15 to 1? So that number is clearly going to be above $500, significantly above that. And my opinion is, don't even think about where we'll be, because frankly, if we get to $500 silver, we're going to have a lot bigger problems to deal with than how much your silver costs.
Just a fantastic response. And you know what? I want to weigh in and say that I'm tracking with you on that 100%. And what I've said to people, too, who email me, like let's take Colin, for instance. He's the one that loves silver so much he can't stop buying it. He noted at the end of his question, he says, thanks to people like you, Andy, I now have over 1,300 ounces of silver. So let's take that 1,300 ounces of silver as an example. Mike Maloney has said in the future he foresees a time when 500 ounces will be more than enough to pay off, the normal size, the median size house mortgage. Now, in Colin's case, he might want to take 500 ounces at some point, convert it to fiat to pay off his fiat paper debts, but keep that other 800 ounces for whatever new system is coming. Does that make sense?
Yeah, and again, back to the last piece. Gold and silver, the key to answering it is gold and silver are money. They are not investments. It's not a matter of when silver goes from $30 to, quote, $500. It's what will make it be $500 per ounce will be depreciation of the dollar, not an increase in silver. I mean, silver, I laugh when people say gold and silver, they're just a hunk of rock. Yeah, they are a hunk of rock. That's the beauty of it. They don't change. Bonds change. They change in value. The underlying assets become bankrupt, etc. And it's all a matter of once you realize that gold and silver are money that have been a reliable store of value forever, you know that in any situation, it's going to maintain its purchasing power. Now, the fact that the thing that confuses everyone so much is over the last 20 years, we've had this anomaly in history, and I'm talking about a major anomaly in 5,000 years of history where the perception were that gold and silver were not money and that, in fact, dollars were. And this was because the all-time greatest Frankenstein experiment of taking the entire world off the gold standard at once and allowing the growth of credit. There was no credit industry 20, 30 years ago, to take over and allow people to think that they were worth more than they were and that they could buy more than they were. It's just a tiny, tiny microcosm of history, which we happen to be born in the middle of, and we're right at the end of right now. But eventually, you look at your history books, you just look at how things have always happened, you realize that gold and silver will at some point in our lifetimes, unless you're very, very old right now, be recognized universally as money, as they always have been.
Okay, so 3 more questions to go, and this one's really about the silver to gold price ratio, as I mentioned. It's from Joe, and he says, I've been trading more of my gold now for silver, quarter-ounce gold eagles here and there. Okay, he says, I like gold, but I love silver, and I'm wondering if I should swap out the rest of my gold position for silver. Should I do that more slowly or more quickly based on whatever you think is coming? What should I do?
Right, okay. Well, this is another one of these questions. Should I own mining shares? Should I not? It's all up to you, because gold and silver are both money, but they're 2 completely different markets. Silver is far smaller. It's far more volatile. I mean, frankly, it's more volatile because it's more manipulatable. If you looked at a ratio of how much paper silver there is to physical silver, I'll bet you that ratio is much higher than how much paper gold there is to actual gold. Although the ratios are very high in both cases, so it gets far more volatile. It also has a stigma that. Look, gold has been money much more recently in history than silver. So there's less of an understanding in people's minds that silver is also money. Not that it's not the case. I mean, look at what Hugo Price is doing in Mexico. So the propaganda that tries to play it off as an industrial metal can work a little more than it can with gold. So until we get through this end game where you break the cartel and the banks finally fall apart and they can't just put them back together with new money printing, silver will be more volatile. There's no doubt about it. That said, it's far more cheap, and it's going to go into no offer, as I call it, much quicker because there's much less of it. So if you're willing, let's say we have another 2008-like collapse and the cartel is actually able to make precious metals fall with the market again, you may see your physical silver fall in value. If you own paper silver, you're going to get crushed. If you own physical silver, it'll be volatile. What can you do about it? But you really have to understand that gold will definitely be less volatile than silver until the end game, when holding that silver will have been worth it because it will go up more.
Okay, excellent. Well, this one comes from Deep Soul Radio, and Deep Soul says, Andy, I enjoy your rants, especially the all caps, especially the stuff you do in all caps, and any reference to the Death Star. Laugh out loud. Question: for those of us who have decided to hold shares, what do you view as the greatest risk with this post-MF global situation?
The answer is there's no greatest risk. I view a million risks. But here's what I think is going to happen. Okay, everyone says, well, what do you think? What will happen? I have no idea. But if you told me this minute in time what I think is going to happen, I think that the cartel is going to be able to, as they have since what I call D-Day a year ago, completely control the large cap stocks, which trickles down to the small cap stocks, which have been, just the worst investments on earth. But I do believe that at some point, maybe in 2012, the cartel starts to seriously break. Gold and silver will really move. And I believe when that happens, it's hard for me to see the stocks, at least the larger cap ones, having a huge move upward. Will the juniors all move? I don't know. It's a difficult business. They're very diluted. Maybe they will, maybe they won't. I do believe there's going to be a window, though, between the time that the cartel breaks and when all hell breaks loose, meaning currencies fall apart, governments make draconian decrees. And at that point, nationalization risks are going to come in. As soon as you see the first hint of nationalization rumors about the United States or Australia or Mexico, that's it for the whole sector of mining stocks. And so at this moment, I think there'll be a window, and you better be nimble to get out of that window. And I don't think, like some people say, that, look, when I first started investing 10 years ago and I was all in mining stocks, all juniors, I was investing offensively, meaning this is going to be like the internet. I'm just trying to, out of greed, make money. Now it's not going to be like that. There's not going to be this big internet craze where junior mining stocks like in the 1970s go to $500 a share. There's no way they'll get there before the nationalization risks come in. So you have to be very selective in what you own, be willing to take a lot of pounding before you get to that window. And once that window opens, get out of it as soon as there's this first sign of trouble.
Hey, did you happen to see the video that's sort of making the rounds? It's from an episode of the TV show, I think it's on Discovery, it's on cable, called How It's Made, and it features a segment on silver mining.
Yeah.
Have you seen that?
Absolutely.
Oh.
I put it in my piece a day or two ago because people need to understand how difficult it is.
It's incredible.
To get this stuff out of the ground. And I know, look, I worked for 4 years as head of IR for a junior mining company, and then I spent a year at Torrey Hills Capital, which is probably the biggest U.S.-based junior mining company consultant. So I had 30 clients, and I've been to tons of mines and seen the problems that they go through. It is so hard for a junior mining company to become a success, especially in this kind of horrible market environment. And so for every one of these frontier golds that get bought by Newmont, you're talking 50 to 100 to 500 that go nowhere and stay at 10 cents forever.
Well, yeah, and I just want to say for folks who haven't seen this, go to SGT Report, go to the little Google toolbar on the the right side of the upper page, and type in. You won't believe how hard it is to find and refine silver. And watch this 5-minute video; it'll blow you away because in this case they're showcasing First Majestic, which is a successful company, and just watching it, Andy, exhausted me and how difficult, what a nightmare job it is to pull silver out of the ground and refine it. And it made me appreciate every ounce that I've got 1,000 times more because it makes me realize how rare and precious it is.
Yeah, I mean, First Majestic, a great company, but they're a pimple on the butt of some of the bigger names like the Newmont Minings, for them, for First Majestic, they must seem like Newmont Mining compared to all these little companies that have dreams of one day producing a doré bar. And it's extremely difficult. It took a long, long road for First Majestic to get there, and there's only a couple of companies like it out there. And the odds of any junior mining company even coming close to that level of success are, 1 in 1,000.
It's just fascinating. Okay, this is a great way to wrap it up. This one comes from a viewer in Sweden. His name is Jurgen, and Jurgen writes this. Andy, are there countries that you would rather live in the coming 10 years? I live in Sweden, and I hope that country is on your good-to-live-in list. Well, I'll jump on the back and say, how do you feel about Sweden? How do you feel about the States?
Well, look, I can't speak for individual countries. My sense is Sweden is probably one of the best places to live. They have a very peaceful structure. They're financially sound. They're self-sufficient. They're one of the few Euro countries that probably would make it into the, quote, Northern Euro that Germany would let in, and they have a high standard of living. So
and they're well-armed.
Yeah, and I didn't even know that. So I'm not worried about Sweden. I'm not particularly worried about Canada. I think the U.S. is probably, look, I'm not saying it's the most dangerous place to live. It's not a third world country. But the fact is the U.S. has the furthest to fall. It has the most debt. It has the highest standard of living compared to what's beneath that, and therefore you're going to see a lot of people fall from grace. And not just people in third world countries who are used to these kind of things. In America, everyone's used to believing that they should have whatever they want. Heck, they should all have an iPhone. Everyone should have one, let alone food. So I think you're going to have the largest fall and probably some of the most draconian government measures compared to the way things have always been here, compared to most countries. And as for the rest of the countries in the world, just do your due diligence. Some will be very safe. Some will be treacherous. I don't want to be in Europe. I don't want to be in the United States. I don't want to be in places that have always been third world countries. I don't want to be in Mexico. Sweden's good, though.
Okay. Well, Jurgen, you're in good shape then. Well, Andy, thanks for being so generous with your time. We spent 45 minutes with you. It's always a valuable conversation when we talk, and I really appreciate it. If people want to hook up with you guys at Miles Franklin to buy a little bit more physical, what's the best way for them to do that?
Just go to milesfranklin.com where you can get all of our contact information, as well as on the homepage sign up for my daily rants, as well as David Scheckman's daily rants or daily blog.
Andy, we really appreciate it, man, and until we speak again, take good care.
Great. Have a Happy New Year.
You too. Merry Christmas.
Talk to you soon.
Bye-bye.
Bye.
Well, thanks for tuning in, and have a very Merry Christmas. And check out sgtreport.com for all the latest. Good night.